here. Jenny Horne, host of Next Gen Investing, is taking a look at some particular movers, names to watch, including Adobe, which had its quarterly earnings report. Some of the details there. Good morning, Jenny.
Good morning, Nicole. And yeah, not seeing a favorable reaction in Adobe shares here, but unfortunately, it's very difficult to even gauge what was exactly so disliked, because there were definitely things to be optimistic about. We did see the fact that they achieved record revenue of $5.9 billion roughly in their second quarter of fiscal 2025. It represents about 11% year-over-year growth. And we also did see diluted earnings per share were $3.94 on a GAAP basis and around $5.06 on a non-GAAP basis. Also, cash flows from their operations totaled just shy of $2.2 billion. And when exiting the quarter, we did see remaining performance obligations standing at around $19.7 billion. Well, overall, they repurchased about 8.6 million shares throughout the quarter. Also notable was their digital media segment revenue. That rose around 11%, we saw about 11% year-over-year growth, or 12% when converted into constant currency. Digital media recurring revenue also exited the quarter with around a 12% spike on a year-over-year basis. Digital experiences also was up about 10% year-over-year, and digital experience subscription revenue rose about 11% from last year. So all of that, I mean, it represents pretty healthy growth. When you look at like their customer group that they disclose out, like business professionals or consumers, that actually was a 15% year-over-year jump, with revenue in that category totaling $1.6 billion. Creative and marketing professionals, though, was around $4 billion of their revenue. That represents about a 10% jump. So all this to be said, I mean, they lifted guidance. We're talking double-digit percentage gains like throughout every number I just read on a year-over-year basis. And I went into the weeds this morning, Nicole. And yeah, it's frankly difficult to understand what exactly we just didn't like. But I mean, sometimes with these tech names, it's just as simple as, hey, maybe we had, just expectations had gotten too high. But I even have a hard time making that case with Adobe, because frankly, they weren't that high as we went into the report yesterday. And also, this name trades with a pretty low PE historically. So it's not even like its valuation has been stretched where we're seeing like a Broadcom type reaction where we're just saying, hey, we're at all-time highs. I mean, this has been a very different story. And I'm actually just frankly shocked that the street didn't find more to like within this quarterly report.
Yeah, understood. I mean, with beating the street, raising the guidance, I do see some price target hikes around it, but the market environment today is also just not particularly friendly or any risk on at all. People are a little more nervous today. I mean, it's so different than yesterday when we saw such great moves after the Oracle report, right? That really brought optimism to all things tech. And today, just a different picture with the pressure on the market.
Yeah, and I think I mean, we talk about an area of the market right now that is fairly frothy and exposed to some of the geopolitical risks. So, I mean, just to simplify it, that could be exactly what we're seeing, where tech has just been one to trade with the exposure to the overall markets, which are lowered this morning. But, I mean, also in the case of Adobe, maybe it's the fact that we were still looking for more. And I think that this has been a sticking point for investors, as we've been so used to like their digital media annual recurring revenue, for example, being so much of a point of strength, and the upbeat commentary perhaps just wasn't enough, because I think that you look at the businesses in which AI challenges. To me, AI completely challenges the competitive moat Adobe has had for years. I think that's still a pretty well agreed upon narrative, and I think maybe that's why with this outlook, even if raised, maybe it just wasn't good enough.
Yeah, understood. I mean, there are names that have managed to really soar today, like RH, like Restoration Hardware, formerly Restoration Hardware, 18% higher this morning.
I mean, it's just amazing to me, because I know we previewed this name yesterday with, I mean, the average ticket size of just their couches alone is like $15,000. This is such a niche retailer. I mean, I wish my whole apartment was honestly RH, so it's definitely not a knock against the quality or the aesthetic of their offerings, because it's all like beautiful things. And the stores are also beautiful. There's one here in Chicago that's like one of the fanciest restaurants we have here in the city. So it's really for that reason such a niche but amazing offering. It just to me doesn't have this like mass mainstream appeal. So to see now second quarter growth of around 8 to 10% with a projected now for the remainder of this fiscal year 10 to 13%. I mean, also just continuing to see like nothing but optimism following this first quarter. I've seen nothing but pretty positive analyst notes like Stifel today saying this was far stronger than expected. They also say that despite taking a pretty big hit from tariffs, much of them, the right now tariffs should be absorbed by vendor parties, and they do expect to make up for that revenue in just less than a year. So for that reason, the backing of their outlook was also huge. I mean, I do think luxury retail right now, we talk about when times are good, when times are maybe more thought to be strained. You do have consumers that rise above, and it tends to be those that can afford the $15,000 couch, whether times are good or bad. And so there is a resiliency here that we're attracting. And also, they have been very much focused on international expansion. I know that they mentioned they were almost 70% coming from or being manufactured overseas. So the fact that they're able to make that up in just this year, I think shows, wow. I mean, like inventory for this company has been applaudable.
Incredible day here for Restoration Hardware, and despite tariffs and macroeconomic uncertainty, really nice that they backed their outlook and talked about the improvements that they expect in the latter half of the year with new products, expansion abroad, just really a message of hope and growth and good things, and that got them an 18% gain today. Jenny Horne, great to see you. Thank you so much. Really appreciate it.